Hello traders, today is the 3rd of February 2013, and the time in London is 1:46 a.m. In New York 08:46 p.m. The time difference in New York is still 2nd of February 2013, but in London now is the 3rd of February 13. Happy weekend to you all. This video is about advanced technical analysis. We will analyze the S&P 500, okay, the Australian dollar US dollar currency pair, and the US dollar Canadian dollar currency pair. This video is dedicated to the Australian and the Canadian TSTAW traders. Let's get started. Advanced technical analysis. We will start from the yearly chart for the S&P 500. Anytime we are doing technical analysis, we must check the market first. This is about the trading triangle. The market first, then the sector or the group, before the financial instrument. Okay, that's how we want to do the advanced technical analysis all the time. The market first. You want to know what is the S&P 500 is doing, whether you are in Bangkok, okay, any country, okay, in the world, okay, wherever you are, the S&P 500 is the market. If the S&P 500 is bullish, we give priority to bullish financial instrument. If the S&P 500 is bearish, we give priority to bearish financial instrument. If the S&P 500 is at a resistance zone, we will switch to day trading, okay, strategy. If the S&P 500 is moving from one support level to the next resistance level, okay, we will give priority to swing trading, okay, or position trading, okay, moving the same direction like the market itself. On the other hand, like in 2008, the S&P 500 was bearish. It will be completely stupid to buy and hold when the market is bearish, okay? We want to align, okay, all our investment and trading decision with the direction of the S&P 500. Very important, okay? What do we see on this yearly chart? We can see that since 1984 up to 1998, okay, it was a bullish cycle. Look at that. Boom, 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 boom. All right? And then the price pull back. What do I say to traders? The 50% Fibonacci retracement is a psychological price level. Do not forget that, okay? 50% retracement is a psychological price level. Traders are watching very often the price will dip below the 50% retracement level, trying to reach the 61.8% Fibonacci retracement level, okay? All right, very, very important. This zone between the 50% and the 61.8%, very often we'll see, okay, either the market will change direction, okay, or a new cycle will begin from that point in time. All right, very, very critical price level. So when we know that the market has been bullish for a long, long time, a cycle has, okay, lasted for a long time, okay, and then the price pulling back near the 50% and 61.8%, we want to watch it carefully. All right, we want to watch it carefully, okay? So the S&P 500 went up from 1984 to 1998 and then pulled back to the 50% Fibonacci retracement zone. I know that, okay? This is the zone, and it did change direction a bit here, went up again to the same resistance zone. In 2007, the S&P 500 returned back again to the 50% and the 61.8% zone. These are very important psychological price level, 50%. So what we want to see, I will show you now on this chart, advanced, okay, technical. So the price go up, okay, and then you see bullish, strong bullish progression, and then a pullback near the 50% and 61.8% zone. Doesn't mean that, okay, you just go and buy like old-fashioned traders, but you want to look and see what is happening in that zone because these are decision zone, okay? So price very, very bullish, either on the hourly chart, 4-hour chart, any time frame, very, very bullish, and then retrace back to the 50% and the 61.8. Don't just buy. Wait for clear-cut signal. When you buy, monitor it because sometimes the price will display A, B, C, which means you go up a bit and then crash back down. Doesn't mean that you will definitely go back up, but this is a psychological price level. On the other hand, if the price goes down for a long, long time, which means the bear were dominating the market or the predominant market force, okay, is bearish, okay? So the bear were dominating the market for some time, and then the price pulled back, okay, the price rally, okay, up a bit, okay, into the 50% or up to the 61.8, you want to watch it because, well, if you have done physics before, the dominant force is bearish, pull back in the zone of 50%. If they don't take more than 50% profit, it means that they're still in control, okay? So that's why the 50% zone is a very, it's a highly psychological level, okay? We are watching whether the bear are losing control or the bulls are losing control. If the bull were dominating the market and the price D below the 50%, we want to watch it carefully what is going to happen. All right, so break below, retest, turn around. That will confirm that the bulls are losing control. On the other hand, if the price went down and went back above the 50%, break above, retest, and turn around, we know that, okay, the bear are losing control. But all I'm saying to you, the 50% is a psychological price level. The predominant force and the retracement, okay, around 50%, usually will be followed by a continuation. But do not just trade it, okay, like, I don't know, like a robot, okay, which means you buy or you sell anyhow in this zone. That's not the right way forward, okay? So, you see, it went up and then pulled back here. Now, where are we? What are we talking about now? What's happening now? The key level for the S&P 500, if you trade E-mini or you trade stock, the most important level that professionals were watching for a long time is the 1500. Note it down, 1500. We are above it now, bullishly. We are now at a 1513. As long as the S&P 500 remain above the 1500, we need to give priority to bullish signal. But, as I explained to traders, okay, okay, on our website, okay, trading room, okay, I'm trying to do something with my software here. That's exactly what I want to do, exactly that. So, though the price is above the 1500 level, we need to watch this resistance zone. You see the wick on top of this yearly candle, still a resistance zone. Another key point I want traders to pay attention to in this red line here is the 1.13%, okay, projection of this leg, this movement, okay. So price went up to this level, retraced back down to this level. The Fibonacci extension level of 1.13% is this level, is at 1645. Note it down. If you trade stocks, if you trade E-mini, whatever you are trading, whenever the S&P 500 reaches this level of 1645, take profit or secure your gain, because it's a very important level. We will pause, which we will wait and see what the market will do. If he break above the 1645 and retest it, I think he will retest it many times to make sure it's strong level. If he finds support above 1645, we are likely to see the continuation, okay, of the bullish trend, which means we'll have something like a ABCD, which means from here, okay, from here to this level, that will be A, B, and this movement up and down, that will be, okay, the C zone, for those who know ABCD chart pattern. Alright, so you'll be something like this. Alright, so pay attention carefully, because I don't want the video to be too long. Alright, so if the S&P 500 find a support above 1645, we are likely to see a continuation, okay? Price may continue the movement to the upside side, which means the distance from A to B, we can project it, move it from here, and put it, okay, so here like this, all right, here like this, okay, from this point. So the price may continue the movement to the upper side. But all I would say to S&P 500 traders, stock traders, okay, 1500, we are above it. We are giving priority to bullish signal, but there are resistance here, so watch it carefully. But right now, the dominant force is bullish, and because a new month has started, we will implement trading idea part 2. Very important. The next thing you want to remember, the level of 1645, note it down. You can save it, write it on your smartphone, wherever you are. When you hear that the S&P 500 is at 1645, secure your gain, pause, wait for the market to show you the direction. Very, very important level. That's all I can say about the S&P 500. All right. I will go now to the daily charts. As always, when you are trading, you must use, okay, at least 2 time frames. Do not use a single time frame to make your decision. For instance, those who are swing trading, they will go to the daily chart and they will look for chart pattern and they will make a decision. And sometimes they will lose because they are using just the daily chart. That's not the right way forward. You must use at least 2 time frames to make excellent decisions. The higher time frame commands the lower time frame. The entry time frame is where we are ready to enter the trade. We will select the time frame in which we will enter the trade and, okay, to time our entry carefully. You see here, the price going down from here. You see it was going up from here all the way up here. But if you buy here, you can lose because the price is going down. All right? So you want to know where to buy. This is about timing. Okay? So on these daily charts, we know that the bulls are dominant force now. Okay? So there is a channel here. On the, I will just do a channel roughly like this. Okay? If you accept that. Okay? So I'm just what I'm doing now. Okay, here like this. I will explain to you what I've done now in a moment. Okay, bear with me. Okay, I'm going to color my channel into red, so that will be more visible to everybody. We have a channel here, and this is the channel that we must watch carefully. This point and this point allow me to draw my red line here, and I choose this point here to make it parallel to this line. That's all. So the next thing we want to do whenever we have a channel, we must have okay, the media line right here. The media line is right here. You see, it's sitting on it now nicely here. But you have to understand that because we are at the beginning of a new month, we must implement the trading idea part 2. All right, trading idea part 2. All right, very, very important. All right, very, very important. Don't just go and buy anyhow because we are above 1500. There's a high chance the price may pull back a bit before going up. We will see what will happen. But right now we are in a bullish channel. Watch it carefully. All right. So if the price, for instance, okay, pull back somewhere here, do not. You can still draw another line here. Okay. Yeah, the middle line of these 2 lines here. All right. So that's it for the S&P 500. All right. Key level 1645, 1500. We are now in the bullish zone, prior to bullish signal, but we do not forget, okay, the resistance on the yearly chart. Still, there are resistance in this zone. The key point we need to remember is 1645. That will do. Okay, that will do. Okay, if the bullish momentum continues above 1645, which means the fundamentals are sound, the U.S. economy is doing very well, business are recovering. Remember the trading triangle, the fundamentals, very, very important. You have a bullish cycle, a solid bullish cycle, without a strong fundamentals. The unemployment in the United States should continue to go down. The economy should be recovering, and the bullish momentum, okay, will continue. Otherwise, the cycle will stall. We must always adhere to the trading triangle. Very, very important. The next candidate, ladies and gentlemen, moving on very fast. We'll look at the Australian dollar, US dollar currency pair. Okay. Australian dollar, US dollar currency pair. I will go to the yearly chart again for this currency pair. On the yearly chart is what we see. Okay, this is 2009, the candle here, 2010, 2011, 2012, 2013. In 2011, okay, the Australian dollar US dollar currency pair went to the highest point. The high in 2011 was at 11079. Okay, 11079, 11079. I'll color that line. Okay, in red also. That's the highest point for this currency pair. Okay. One level that I want traders to write down, I'll color it now into orange. It's not the exact small median line, okay? I need to say this clearly, because if you have calculated the small median line for this currency pair, I'm saying to you this is not the exact small median line, but it's in the zone of the small median line. So I'm quoting a level of okay, 8679. Okay, 8679 for, okay, I prefer to use a fine number, so 86795. 86795 for the Australian dollar US dollar currency pair. This is the zone for the small median line. As I explained to you, this is not the exact small median line. If you want to know more about the critical price levels, you need to go to Google and search for the article titled Trading Critical Price Level. The small median line is the most influential critical price level. For the Australian dollar US dollar currency pair, it's in a zone of 86795. As I explained to you, this is not the exact level for the small median line, but it is in that zone. Very important. So if there is a bearish pressure on this currency pair, which I'm going to explain to you soon, okay, there's a high chance that the primary SIC, okay, may try to return to the small median line. So this is the level we want to watch this year. If the price at one point, okay, I'm not saying that it's going to go down now. If at one point the bear start dominating this okay, currency pair, the level we want to watch is the small median line in the zone, okay, in the zone, okay, 86, okay, in the zone of 86, which level I quote for you now, okay, 86, call it 8667, blah blah blah, okay, all right. So calculate the correct small median line, check the article on Google, calculate the exact level. So we want to watch the small median line this year, very important level. If, okay, this currency pair start rolling it down, I am not saying that it will go down. The key point I want trader to remember is that when, if, okay, for instance, okay, the Fed said that they have stopped printing the dollar, which is putting pressure on this currency pair, we will also watch, okay, the monetary policy in Australia, okay. So we will see if they start cutting interest rates in Australia, if the economy starts, okay, weakening, okay, we will see, okay, this, okay, this currency pair going down, okay. I believe that the Australian economy will also, okay, because the market is fractal. United States went to recession, United Kingdom went to a recession, Europe is experiencing recession, okay, there will be some repercussion in Australia, so we will see a kind of contraction, okay, all right. But moving on very fast, so that's what I can say to you on the yearly chart. What's happening now for this currency pair? Very important, okay. I'm going to go, okay, to the daily chart. Pay attention carefully. To the daily chart, if you are trading this currency pair, okay, all right, well, that's it. Where are we? Here we are here on the daily chart. I want to draw a line somewhere in this zone. Pay attention carefully. If you trade this currency pair, I'll put pink to get your attention. So here it is. Sometimes I may quote a different number, but roughly, okay, just think of it as roughly zone. I will say 10484, 10484, okay, Note that level down, very important, 10484. All right. We are expecting, ladies and gentlemen, we are expecting this currency pair to continue the movement to the upside to this pink line here in the zone of 10484. In my view, this currency pair this year will be bearish, provided that the economy in Australia is facing a bit of contraction. But if the economy is performing above average, forget about the bearish pressure. This currency pair will continue movement to the upside. Or if, for instance, the Fed suddenly decided to change their mind and start printing more dollar, all right, you will see that this currency pair will continue movement to the upper side. But if things remain intact as it is now, there's a high chance this currency pair, in the course of this year 2013, we will see at one point that it will start going down. But in the first stage, pay attention carefully, the first stage, we are expecting this currency pair to go up a bit, especially from next week, to start going up, and to come near the zone, of 10484. That's my estimation, up to 10484. All right, note it down. It may not happen straight away, as we have seen very often. We are ahead of the market. The market will play around, but it will come back and do exactly what we have said. As we have said for the Euro USD, that Euro USD will go to 12000. The market were playing. At the end, they went to 12000. I'm not saying that everything that we said is always true. Never assume anything, Always test and keep your eyes on the price. Do not be bold, do not be confident, all right? Follow the price. All I'm saying to you here is technical analysis, but the market will decide, So now, that's my estimation. That there's a high chance this currency pair may go near the level of 10484. When it reaches this level, we should be able to take profit. The price will pull back again, all right? The price will pull back again, all right, before going up again. So we expect it to come here, and then it will pull back again. It will pull back again. It will pull back a bit, like this, something like that. And then we will expect it again to move up a bit, up here. Pay attention carefully here. And to pull back up again here, somewhere here. A bit up, just a bit up. And this time, to come back completely down to take this low. So here, what we are saying, we are expecting it to roll in. Let me put my drawing on this chart. We want it to go from here to this level first time. That's what we are expecting it to do now. It may not do it straight away. The market may try to do hide and seek. We will see. But at the end, we will see what's going to happen. If it comes to this level, the resistance here, look on your left hand side, you see, that's why it's resistance here, you see. So to the next resistance level, we expect it to pull back, which brings us to this level. The second one here, somewhere here. And then from here, in the third move, to go a bit higher than the previous move. And from here, the bear will take it down big time. They will try to force it down straight away. We will have a new lower low here, but something strange will happen, which means the price will go up again, higher. People that were forcing it here will be surprised at the Australian dollar. I don't know what will make that happen, but according to my estimation, the price may bring it all the way up here. I will not tell you more about what will happen next. I will just leave it like this, because this is just technical analysis, advanced technical analysis, for TST traders. So our strategy is very simple. We are not trying, to forecast the market. We are not trying to impose our, expectation on the market. We are not trying to, disregard other market participants. But what is happening, ladies and gentlemen, this is a technical analysis. the economy news can change all this blah blah blah. Okay, the Fed can stand tomorrow and do something. Okay, the central bank in Australia can change all this blah blah blah. Okay, so to speak, and any crazy event can change the dynamics of the market, which means if we see the Fed printing more dollar, or the central bank in Australia, okay, increasing the interest rate in their country, or the economy in Australia performing, okay, better than we will expect, this currency pair will continue movement to the upper side. My apology traders for this pop-up. You see now? So, as always, especially if you are a new trader and you are watching a video on YouTube, do not take it, because very often my fellow colleague traders will post video usually on Sunday night. Traders will watch it, and Monday they will place a trade because of what is said, okay, during the course of the video. But because these new traders do not understand the trading triangle, as the market opens, go to www.forexfactory.com. News are released in the morning, okay, in the morning. Around 9:30 London time, that's 4:30 a.m. in New York. News coming out at 8:30 a.m. Eastern time, 1:30 p.m. London time. News are coming. So news can change the dynamics of the market. Sometimes the price may be going up during the daytime, and the news will be released, and the whole thing change again. A bullish momentum will change completely and become a bearish. So attention to the economy news. Do not trade the technical alone, combine both. This is my approach, and also never assume anything. The biggest mistake that traders are making, especially those who are swing trading, they will do their technical analysis on Friday night, Saturday night, Sunday night. I've done it myself, okay, and Monday or straight away they place a trade, and the market will do something completely different because they impose their intention on the market. The best scenario, you have your expectation, like I'm showing you here. I'm expecting this currency pair to move to the zone of 10484. If it's doing it, I will take advantage of it. Come to my target, I'll take my profit. Good. I'm happy, trader, okay? So here I'll be watching for resistance. All right? Resistance? Good. If you find a resistance here, give me a sell signal, I will take it. As it's approaching my target, in fact, I'll come up before everybody else. I'm a conservative trader. I'm not greedy. Though sometimes you can be greedy or stubborn, okay? And the market will punish you, so you learn something from it. Then, okay. So, if it's rolling it down from here, I will take advantage of it. Come in near my target. I will close my trade. Come out. Wait. Next step. If you give me another bullish signal here, I will take it. But if it's going up, I'm not going to say definitely it's going to reach my target. The music can change on the way up. Even if you start going up here, the music can change here, and you will see going back down. News can change the dynamics of the market. Market leaders, market indicators can change the dynamics of the market. So pay attention, okay, to everything that we are seeing here, but do not impose what we have said here on the market. Do not think that this is a guarantee. There's nothing like guarantee. There's nothing like certainty. It's all about probability. All right. So we are, to cut long story short, okay. So we are expecting it, the Australian dollar, US dollar currency pair, to find a support here and to continue the bullish momentum into a zone of 10484. At that point, take profit. Next step. All right. If you receive a sell signal in the zone, which is a resistance zone, we'll expect it to roll it down a bit, just a bit, okay, not too much, a bit, and then we'll grab a bit of profit. If we receive a buy signal here, we will take it. You bring it higher than these levels. All right? Why there's a high chance you bring it higher? Pay attention. This is about understanding. So there was a bullish momentum if, for instance, the price went up to this level, which who are dominating the market? The bulls are dominating the market. Now they took, okay, less than 50% profit in the zone of 50%, 61.8. They are still in charge. So if you receive a bullish signal here, there is a high chance that it may break the previous resistance level. So which means this is an invitation to buy. More bull coming in to join the previous bull. They have a majority. They are likely to take this resistance out. So the price may go above the previous resistance level. Does not have to. It's a high chance, probability, not certainty. Next step, from here, we will take profit. If you roll it down, now the bear would like to sell. Why? Why they would like to sell here? Okay, let's draw lines. They would like to sell here because if you draw a trend line here, you see this level here, this point and this point, there's a trend line here. So it's normal that people will challenge it. It's a bearish. It's not on the, it's on the daily chart, okay? They may take, you see? So bear take controlling it because what's going to happen here, everybody know that there's a resistance here, they would like to take their profit. So bull that were buying before will take profit here, bear that were waiting here also will join. The majority force is becoming bearish, push it down, they'll take this one out. Next step, here, they couldn't cancel the whole, this is the first, you remember, they couldn't cancel the predominant force. Still couldn't go below to display new lower low. So trader, the bull will come in and say, hold on a second, we can still take control. And they will push it higher here. I don't want to say what will happen at this point in time. All right? So this is just a quick technical analysis about the Australian dollar, US dollar currency pair for forex traders. Let's go to the hourly chart, a very friendly time frame. All right? I want to talk about one of the Fibonacci pattern on the hourly chart of this. I will remove all my drawings on the hourly chart for this. There is a pattern here. Can you see it? All right. Okay. I'm testing TSTW traders. Okay. There is a pattern here. Watch this session. Okay, all the way here. There's a pattern here. Can you see the pattern? I'm quiet for 1 minute, okay, just for trading test for you. Which pattern, okay, can you see here? All right. If you have noticed the pattern before I said it, okay, make a comment below it, or what you were thinking before I said it, put it down. So think of it for a second. Which pattern, okay, do you, okay, see, okay, in this section here? Okay, have you seen it? Okay, maybe not. All right. If you are a new trader, you may not see it. Okay, but experienced trader will say, George, come on, tell them. All right, I'll tell you. There's a pattern here. Going to draw a line from here to here. All right, if I'm correct myself. If I'm not correct, okay, put the comment below. Okay. All right. Pay attention to what I'm doing here. Okay. All right. And then another move to the downside. Can you see now? Can you see the pattern? Okay, all right. Let's move on. This is advanced technical analysis. You may not see it, but I want to talk about one Fibonacci pattern. There are many Fibonacci patterns, and there is one here for the Australian dollar. In fact, it's a bullish Fibonacci pattern. This is what we call, okay, the bullish a butterfly pattern. All right, butterfly, okay. This is okay. This is a target zone, and there's a high channel. The price may continue from this point to the level of 10484. So this is a butterfly pattern. The price, you can see the price went up from here. Now, first thing, the bullish butterfly pattern usually now let me say this to you. Pay attention careful to what I'm going to say to you here, especially if you are TSTW SY008 trader. Where do we have, okay, a bullish butterfly pattern? There are two questions, okay, you must always ask, okay. Where and when? It doesn't matter which strategy you are using, you must know when and where, okay, the pattern, okay, can appear. Where and when. If you can answer correctly this question, it means that you understand it. A lot of traders are using the butterfly, bullish butterfly pattern, but if I ask them now, where and when do we see the bullish butterfly pattern, few can answer this question correctly. The bullish butterfly pattern takes place at the end of a bearish, okay, trend. Repeat. All, okay, I'm going to say this again. The bullish butterfly pattern takes place usually, okay, at the end of a bearish trend. All bullish Fibonacci pattern often take place at the end of a bearish trend. All bearish Fibonacci pattern often take place at the end of a bullish trend. So, for instance, if I see a bullish butterfly pattern out of nowhere, and I will be wondering where this is coming from, because I know where and when this pattern should appear. The same thing, when we are using cycle, TSTWSY is usually traders, where and when do we see cycle? You must know. So when you see a cycle in the void, you should be able to distinguish straight away that this is a winter time, we can grow corn, all right? Just to give you an example, okay? So there is a season for it. So you have to see, I was telling you that this pattern here, this is a butterfly pattern. I must see before that a bearish trend. So the price was in a bearish channel. So you want to see something like this, a declining channel. This is where and when one can see, okay, a bullish Fibonacci pattern. The mistake that a lot of traders are making when they are using patterns, they do not know where and when the pattern should appear. Bullish patterns will appear, okay, ladies and gentlemen, during the uptrend, during the bullish cycles, okay? So you want to know what is happening. So for instance, if you have a bullish trend on the daily chart, you are likely to see a lot of okay, bullish pattern appearing, for instance, on a 50-minute chart, on a 10-minute chart, on a 30-minute chart. All right, that's the way it works. So this is a butterfly pattern. Long story short, this is a butterfly pattern. Trader will say, usually they call this one here, okay, they will call this point here A for alpha, or this is what they call X for X-ray, my apology. All right, you see now? I'm getting tired. It's early morning in London. So this X, this is A. And they will call this one here B. And they will call this one here C. And they will call this section here D. In fact, it's A, B, C, D. But they call this section X, A, B, C, D. The criteria is that you see X to A, okay, at this point here. For the butterfly pattern, the A to B should be a retracement of 78.6%. That's the theory. I'm going to show you now, that's the theory. So the A to B should be 78.6% of the SA. All right, but I'll show you here. This is what we talk about practical trading. Look carefully here. All right, look carefully. I will draw a line at a 78.6%. Usually I use 78 alone because I'm calling it zone. This is the level of 78.6 somewhere here. All right, pay attention. Okay, I'm very okay, calm now. All right, so I'm talking slowly. So this is the black line. This is 78.6%. So according to the theory, XA, the retracement AB should be 78%. You can see that if you look carefully here, traders that understood this pattern were buying here. Some traders, you see, they were buying here. Some traders are buying. These are traders that are just buying, or they were looking for opportunity to buy, or day trading opportunity. You see, there was a 1 day here, so day traders take advantage of it. And but price quickly returned back to the same level. They took advantage of it. They thought that you would go up from here, but it didn't. You see, distortion. This level here, you should be able to understand what is a distortion. It's happening all the time in the market because of too many computers. All right, too many computers. So there's a high channel you will see. Okay, somebody using some crazy robot. Somewhere else, somebody using another system somewhere else. You see this candle here, this is a distortion. They push it back down. These traders that were taking the pattern here, okay, they were taken out first. This candle here is a distortion. But at this point in time, you will know that it's a distortion. But one thing you have to understand that the small money, if the small money want to buy, they buy the best place. There's a better support level here. Always remember that. So when you are buying here, you will know that, okay, though I'm buying here, there's a better support level here. This one. The small money say, no, I know, but I don't want to buy here. I want to buy here. So they bring it back here. So probably these people were taken out. Okay? But in theory, the A to B should be 78.6%. But in reality of the market, you see, messy things do happen. So if you learn this by heart and you know it in theory, understand that in trading, crazy things do happen, and you should be able to dictate where is the distortion. Or you can, at this point in time, all we will say, we will acknowledge it. So I'll draw a line and I'll highlight the candle and watch it. You see, quickly, they went back above it, which is confirming to me something fishy has happened here. All right, I may be wrong, but then the B to C, okay, should be between 38.2% retracement or up to 88.6% retracement of the A to B. You may go to www.google.com, search for the butterfly pattern or Fibonacci pattern. You may go to www.youtube.com. Plenty of excellent video about this pattern. Watch them. Okay, but I'm telling you my view here. Where and when do we have the butterfly, the bullish butterfly pattern? So in theory, the B to C should be between 38.2 up to 88.6% retracement of the A to B. If you are a new trader, you may be wondering what's happening to me, but you can go to www.dayprotraders to learn about Fibonacci. All right? Okay, but keep it very simple. All right? The next criteria for the bullish butterfly pattern, which I explained to you, must take place at the end of, okay, a bearish trend. Very important. If you see somewhere else, be very, very cautious, okay? Because traders sometimes, they will see a pattern and they will just trade it. But the pattern is not in the right place. It's not in the right place. But it doesn't mean because you see in the right place, it will definitely work. The trading triangle, okay? The news can change the dynamics of the market. Technical analysis combining with the fundamental. So, and then, look, the last leg, this is the one that betrayed it, you see? The last leg, the theory stated that, okay, this C to D should be 1 to 7% projection of the SA. Look, SA, all right? SA should be 1 to 7 projection. Look, on the dot, can you see on my chart? Can you read it here where I'm moving my cursor? It's 1 to 7% projection here on the dot. That's where exactly it came to touch it here, confirming the butterfly pattern right here. It's a bullish butterfly pattern. So to cut long story short, sometimes I'm speaking at this because I think it's important to explain this thing to traders so they may understand, because understanding is the most important thing in trading. All right. So we have a butterfly pattern, S, A, B, C, D. I explained to you the ratio of the retracement that, okay, qualify this pattern as a bullish butterfly pattern. Because it's at the end of a bearish trend on a daily chart, it's a bullish butterfly pattern. Smart trader, we're buying here. So, how do you handle this? As I explained to you before, this is what we see on the daily chart, by the way. I was saying to you, this is on the, I'm now on the hourly chart. I was saying before, daily chart is not daily chart, this one. This is the hourly chart, okay? So, pay attention, okay? We are on the hourly chart now, that's where I see it. So, this is on the hourly chart, not daily chart, okay? So, right now, you see, so we want to pay attention. So, market open on Monday, because this is the beginning of a new month, the month of February. We will implement, okay, trading idea, what? Part 2, not part 1, part 2. So we are watching our key levels and we want to, okay, what I will do, draw a line here. That was a target zone. Draw a line here. We may see it coming back down here or even dipping below it before going above it. But as a TST trader, all we do, just sit, wait, yeah, wait patiently. Don't jump on it. Just wait. Draw your line, your trend line. Understand the language of the price. Just draw lines and watch it carefully. Okay, all right. This is what we want to say about the Australian dollar, US dollar currency pair. As I show you on the daily chart, okay, my forecast I show you here, but we will not, okay, all right, we will not, okay, force our intention, okay, on the market, okay. As I showed you before, we are expecting this currency pair to go into the zone of 10484 and then pull back a bit and then go back above the 10484 and then come back down big time before returning to the upside. Okay, so pay attention to that, but do not force it. Do not assume anything. Okay, do not take my word for it. Okay, all right. Test my questions. Okay, keep your eyes wide open. Okay, draw your trend lines. The price will move always in the channels. Okay, and steadily, patiently, okay, make excellent decisions. Okay, the next financial instrument is very important for me to see traders doing very well. All right, send me emails. Okay, say to me, George, I've done well today. All right, okay, and I'll be happy to read it. All right, the next financial instrument, ladies and gentlemen, is my Polish traders. I'm getting tired now, but I'll finish this one before I go. The US dollar, Canadian dollar. Though I'm speaking like this, I'm very serious, traders. Moving on. So now, this is the Australian dollar, the US dollar, Canadian dollar currency pair. Ladies and gentlemen, this is a tricky one. I will spend a bit of time to explain a few things to you, okay? When traders are buying the USD yen, very often they are selling the USD CAD to hedge their position. This currency pair is due to go up for a long time, but has been suppressed, okay, because of the hedging activity. There's nothing, okay, evil or illegal about the traders that were, okay, selling this instead of buying it, okay. They were just protecting their position. I respect their choice. But, ladies and gentlemen, as we have seen for this one, the New Zealand dollar currency pair, US dollar currency pair, it was due to go up for some time, okay? But the last 2 days, it was suppressed for a long time. But suddenly, it went up, okay, here you can see 2 days in a row. Even it went from here, this low here, went up big time last week. For the US dollar, Canadian dollar currency pair, we are expecting it to go up. But I don't think it's going to be easy or straightforward, okay? Because of the hedging activities. But all I can say to traders, okay, be patient, okay? Put this on your watch list, especially if you are TSTWS008 trader, and keep watching it. Draw your lines. That's what I can say. Draw your lines, okay? And keep watching, okay, this currency pair, because in our view we are expecting this currency pair to be bullish. So all I'm saying to you, I will not take, okay, in fact I will give priority to bullish signal, okay, at this junction, okay, I'll give priority to bullish signal, and whenever I receive a bullish signal, okay, I will take it, okay. So keep eyes on this, US dollar, Canadian dollar. Remember that there are many, okay, hedging activity in this currency pair, but hopefully, because the major problem is the crazy currency pair, the USD yen, traders are buying it, okay, big time, and also we know that the Japanese government is intervening, okay, in the market. So they are selling the yen big time. So if the Japanese government continue to sell the yen, okay, anyhow, anytime, you will see that this USD yen, the crazy currency pair that we are expecting to give us the healthy pullback, will continue to go up stubbornly. Alright, so to speak. Alright, it will continue to go up stubbornly because this time it's not the market, it's the Japanese government, okay, forcing, okay, the dollar yen, okay, to go vertical instead of going, okay, okay, in a normal progression. Okay, there's a vertical move taking place now. And also to highlight something very important for traders to watch is this level here. I'll put a line there just on this chart, just quickly. I'm just going to mention it to you. I don't need to say it. Okay, the level of 9432. The markets want to retest, okay, this level here. I'm moving some line on my chart. Okay, they want to retest this level, okay, for the USD yen. That's what's happening now. Or they may force it to this level to form, okay, a kind of okay, a round button. Okay, you see the bigger round button, this section here, you see, okay, round button. They want to bring it here in the zone of 9432. There's a high chance they may do that, but in our view, we are expecting it to start running it down a bit. We know it's bullish. We want it to give us a healthy pullback, but some selfish market participant or the Japanese government helping, okay, the USD yen to push it up non-stop. As always, if the price is distorted, we will see a correction. It does not matter whether it's a government that is intervening or not. When there is a distortion, the market will rectify itself. Alright? So watch it carefully. They may push it all the way to 9432 before giving us a chance for a healthy pullback. We will be very patient, okay, and keep eyes on it. Alright? That's what I'm saying to you. So as long as they continue to buy the USD yen, the US dollar, Canadian dollar, will be forced to the downside. This is about hedging activity. So what I'm saying to you now, though we are expecting, okay, this currency pair, the USD yen, to start going up big time, okay, if the yen is not pulling back, this currency pair will be going down. So as soon as the market decided to bring the yen to its fair value, which may give us the healthy pullback, then, okay, there's a triangle here. The USD card, okay, will be allowed, okay, to come out of, okay, this triangle. But all depend on what is happening in Japan and also what is happening with, okay, the crazy currency pair. There is a triangle here. On the monthly charts, okay, we will expect the USD card at one point. I don't know what's going to make the USD yen to go down, but sooner than later, whether the Japanese government themselves stop buying, okay, selling the yen, okay, for a while, okay, something will force the crazy currency pair to go down. Why? Because if there is too much distortion, the market will rectify itself. Doesn't matter whether there is some government intervention or not. Doesn't matter. All right. So we are expecting it, okay, to form a nice rectangle for us, the USD card. Okay. So our future projection is to go up. Okay. To go up into the zone here, okay, to go up, okay, let's be conservative, in the zone of 105, okay, 17. It's ready now, but the only thing holding this currency pair is the USD yen, the Japanese government, all right, and the hedging activity. I'll quickly go to the hourly charts to close this video. Has been a long video, okay, was not my intention. But I thought that it was important to highlight this, important issue for traders, so they may understand, okay, what I'm trying to explain to you here, okay? All right. What I'm going to do now, my apology to traders, okay? The video is a bit too long now, okay? My apology to you, okay? But if I think it's important for you to understand it, okay, then I will do it, okay? One thing I want to say before I close the video, we see that there was a, pay attention carefully here. Okay, I'm going to draw. You see, do you see it? Okay, on the hourly chart, there was, because the way I'm using the hourly chart, I can use 2-hour chart, I can use 4-hour chart, I can use 30 minutes. It's just friendly time frame. Okay, so we see the price consolidating here, and then it came out of the consolidation. Okay, and then the price ran from here all the way up here. Now it's pulling back. I will use my Fibonacci drawing tool from this point. Let me highlight that point on my hourly chart, and then bring it all the way here. The price is trying to retest the zone. Which zone? Guess it. Okay, 50% and 61.8. That's one level here for day trading purposes. You see, there's another consolidation here, very small one. So this is okay. Moment, please. 1 second, please. 1 second, please. All right, you can understand that I'm getting tired now, okay? So forgive me, all right? Please, guys, make your comments, okay? Make your comments. Very important. Make your comments and let us know whether you like it or you hate it or you dislike it. Oh, okay, now. See, you're right, because Google give you that right. You have to use it, okay? YouTube, okay? YouTube give you. All right, okay. The level I want you to watch, okay, next week, okay? Let's call it 9940, okay? USD card 9940. Watch that level carefully. You see the price breaking, run fast, and then there was a consolidation here. 1, 2, 3, 4, 5. Okay, A, B, C, D, E, and then boom, 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 up to this level. Now is now pulling back into the zone of 50%. The 50% is I will draw it also for you. I will color it in blue. That's the psychological price level of the move from here to this level. That's the 50%, the blue line here, called in the zone of 9980, but the 61.8 is below the zone of 9940. There is a high chance it may continue to go down a bit near the 9940. We want to watch the reaction because it's retesting the top of this small consolidation zone. If we receive a bullish signal in this session, we will participate in it. But as I told you, always pay attention to the economy news. Very often, traders will enter the trade and they will forget to check the economy news or monitor the economy news. Download Google Finance onto your smartphone. Download Bloomberg onto your smartphone. Download Yahoo Finance onto your smartphone. Okay, just get into the habit of checking what's going on. Okay, sometimes you'll be surprised. 1 minute they say something, another minute, okay, it's crude oil inventory, okay, unemployment data on Thursday, crude oil inventory on Wednesdays very often, okay, natural gas storage, okay, these are important news. Next week, again, it's the first week of the month. What's happening on the first Friday of the month? Okay, no farm data. So please, next Friday, you may take it off. You may decide not to trade because the non-farm payroll data, I haven't checked my, I don't know whether it's exactly on that date, but very often it's the first Friday of, I will go to check a forest factory by all means. So check the forest factory. First week of the month is a tricky week to trade in. All right. So especially if you're a new trader, next week, be very, very defensive. Don't take signal anyhow. Don't open many positions. It's the first week of the month, all right? But on Friday next week, if the non-farm payroll is due on Friday, I don't want to open it now, the forest factory, all right? Excellent people, lovely people doing excellent job, okay? Credit to them. So you want to pay attention to if the non-farm payroll data, okay? Check the economy, know when it's due. So though we are talking about technical analysis, next week is a busy week for economy news. All this I've said this today may be irrelevant if the news went against what I've said. So you may go back again and watch this video the following weekend if the dust has settled, so to speak, and you will see again that they will mess up everything that I said, and later on we'll replay it exactly. So next week is a bit difficult week for trading, but all I say to you, be focused, be patient, be defensive, okay? And you'll be alright, okay? Alright? So this is the end of this video, and my apology for the length of the video. And I hope you have enjoyed this video, okay? That you have learned something from it, and you will put it to use, okay? To make excellent trading decisions. We are the TSTWSYS008 traders. Thank you for watching, and we will speak to you very soon.